Natural gas, one of the most favorite among commodity traders due to its high liquidity along with its high volatility. So, we earlier talked about crude oil, gold, and even silver among our commodity series. But this is my favorite out of them all. Let's discuss natural gas today. So, if that's the case, what are you waiting for? This is Ajay Ajith. Welcome to Market Feed. So, natural gas commodity trading, that's what we are going to discuss about today. And as I said earlier, it's one of traders' favorite because of these two reasons: high volatility along with high liquidity in both its major as well as micro contracts. We'll get to that. So, just reminding you why commodity trading. Trading after work or between 5 p.m. to 11:30 p.m. is possible in the commodities world. And if you're a good trader who is not getting time to trade only because of your work or personal commitments, you can think about using this time to trade, right? That's the goal of this series. So let's get started with the fourth episode. So moving ahead, agenda of the video. First, we'll discuss how to trade in natural gas, why natural gas, capitals required. This is very important, and make sure that you understand this is a very beginner friendly video. So make sure you watch till the very end where we'll be discussing all of these concepts. What impacts natural gas prices and who should trade natural gas? These are all the things that we'll be discussing today. So let's discuss natural gas. Again, just reminding you that natural gas you can only trade in derivatives, futures as well as options. So in the earlier case, which is gold and silver, in our previous episode, you could still buy them or you could still try to take positional trades in them using gold ETFs like gold bees. But in this case, in the case of natural gas or even crude oil in our second episode, you can only trade using derivatives contracts, that is either futures or options. So if you don't know the basics of futures and options, I would highly suggest you to study that very clearly before you get into commodities segment at all. As in all the commodities out there, there are multiple categories even in natural gas. And here we have two categories. So it is a natural gas major contract or the main contract, and then you have the natural gas mini. So if you have not understood the concept of why there are two contracts, it is nothing but having a major contract which the big players can use to hedge their positions, right? So we understood in our first commodity trading beginners video itself that the commodity segment and MCX is mostly used by large players who have some role to play in this industry. So let's take the case of natural gas. Companies like a natural gas distribution company might take positions here to hedge their large quantities of holdings, right? So physical holdings can be hedged using futures positions. That's the idea. So the major or the natural gas contract here, it is having a high margin requirement so that these big players can easily hedge their huge positions. And natural gas mini, on the other side, is preferred by retailers who can take smaller positions based on the same speculative movements that natural gas would have. So here the margin required would be lower without compromising on the profit percentage. Okay, that's why retailers love natural gas mini so much here. So you can find in-depth details if you want to know any in the MCX website. So you can come here, you can click on products, and then you can click or go to energy, and then you can either select natural gas or natural gas mini. Let's take the case of natural gas here. You can go into futures, and then you can see which all are the logics being applied here. You can see what is a trading unit here. You can see that it is said to be 1250 MMBTU. Right? Let's get into that. And for me, the most important thing here is not the contract value, but the contract expiry date. So just like how we had talked about earlier in our crude oil as well as the gold videos, the expiry dates of natural gas or MCX contracts are not in the way that you think. You really need to understand what is the expiry of the contract that you're trading in. And if you're going to trade in a contract that is expiring in the next 5 to 7 days, I would advise you not to get into it. So for example, let's say the current month's contract is expiring on 28th of January. If today is the 21st of January, right, or the 22nd of January, and you want to trade in this contract, I would suggest you to go for the February contract, because we don't want to get into any of the complexities of taking delivery or any of the margin requirements that comes with MCX trading. So make sure you have this in mind. So you can see here very clearly that natural gas, you have two contracts. One is a major contract with a 1250 BTU contract size. The other one has a trading unit of 1/5 the quantity. So 1/5 the margin will also be reflected here. So we'll get into that. Do not worry. So natural gas, even though it's a physical commodity, it is not in the solid form. So it has a very different measurement unit, which is called as MMBTU, and it has a very specific definition also, right? Temperature of 1 pound of water by 1 degree Fahrenheit. This is what 1 MMBTU is, but no need to worry about that. Let's get back into our presentation here. So let's talk about the natural gas benchmark here. Benchmarks of natural gas is a major one is MCX Energy Index. Okay, so just like how we had the bullion index in gold and silver, in the crude and natural gas segment, we have the MCX Energy Index. And what is that index telling us? It tracks the real-time performance of near-month MCX crude oil and natural gas futures contracts. And again, in bullion, we had a certain ratio with which the index used to move. So just like in bullion, there is a specific ratio here as well. Crude oil is having a weightage of 51.07% and natural gas will be having a weightage of 48.93% in this index. So you can use this index to track the price movements and then to decide what trades to take. But when you're actually taking the trades, I would still suggest you to go with either natural gas major contract or the natural gas mini contract, which gets us to our next part of the presentation, which is how to trade. What is the capital required for you to get started here? So come to your broker's terminal, go to your search option or your watch list and type in natural gas. So you can see here that I've already added natural gas 25 Jan 28 futures. What does it mean? It expires on the 28th of January on the year 2025. That's how you have to read it. Again, if you're seeing both MCX as well as NSE, always go with only the MCX contract. I'll quickly show you how the NSE chart actually looks like so that you can understand very clearly. So this is the MCX or the NSE natural gas chart here. Again, I don't even know who is trading here because there is absolutely zero volume. So I know that most of you will not even think about it. But in the off chance that you're going to get confused, I want to make it very clear, right? So this is how the natural gas and the natural gas mini contracts would look like. And just to give you a lot of clarity here, a single point move in the natural gas major contract will give you a profit of 1,250 rupees, right? So it is very volatile in that way, and you're only having to put up a capital of, let's say, 1.3 lakh. So nearly a 1% profit is what you'll get from a 1 point move in natural gas. Similarly, in the natural gas mini contract, everything is 1/5. So the capital required is 1/5. The PNL fluctuation that you'll see is also 1/5. So again, I would suggest that since it's a highly volatile commodity, you do not go ahead and trade with entire capital because you want to be prepared for drawdowns as well. So make sure you have this in mind before you get started. So after adding both to your watch list, you can come check out what is a capital required to buy or sell one lot of futures here in natural gas. So you can see that the margin required is much better than any of the gold or silver contracts that we saw in the last episode. So you'll need 1.65 lakh rupees, right? To be exact, this is the amount, 1.65 lakh rupees to trade in the natural gas segment. So you can either buy or sell futures. You will require the same capital. Unlike options where option buying has a different capital required and option selling has a different capital required. Here in futures, you do not have that confusion. You can just go ahead and start with trading the same amount here. So while 1.65 lakh rupees is the capital required to trade one lot in the major contract, if we go to the mini contract, do you remember what I told you earlier? You require at least or around 1/5 the capital, right? 1/5 the capital is what you need. So you can see here that 32,584, that is the current contract value, what you'll be requiring if you want to either buy or even sell a natural gas mini contract. Okay, so make sure you have this in mind. Similarly, you can come add the options contract also here in the chart. Just type in natural gas and go to the option segment if you have that in your broker, or you can go to natural gas and enter the strike price of the at the money contract. So I'm going to select 330 for now. So I'm going to add both the 330 call as well as a 330 put here into my watch list. So I will be adding 330 put here. So here I have added both the 330 call as well as a 330 put into my watch list. So you can see that the at the money contract right now is having a combined premium of nearly 20 rupees. But again, if you're going to trade in this segment, I would suggest that you either stick with the at the money options and only for very short duration trades. So whenever you're going out of the money, that means you're going to either buy 350 call option, right? Or 340 call option. The liquidity there would be much lower, especially in these contracts. Again, you can either trade in the at the money contracts here. As you always know, the capital required would be very simple, right? It will be just the premium multiplied by the lot size. So if you're going to buy, only 10,000 rupees of capital is required. So it will look very interesting to buy an at the money contract. This is the only price that you need. But again, if you're going into the market depth, you can see that there is not much activity happening here, right? It is very slow. There is not much movement happening here. And this is at the money. Imagine what would be the situation for out of the money options, right? So I would suggest do not go for options at all. If you really want to, go for at the money only. And also just start with option buying if you're just starting out, and do not get into option selling in the commodity segment at all, right? So let's go ahead and continue the presentation. And if you really want to place a trade, despite all my warnings, make sure that you place only a limit order. Okay, make sure that you place only a limit order, because a market order can lead to you having huge MTM losses, right? Because of the low liquidity, you do not want to go with a market order. You always have to go with a limit order. So just clarifying that here before we move ahead. So in all of our previous video, we talked about the things to check and to try and understand how the prices of these commodities move. Okay, so let's get into all of the points and the data points that you need to check before you start trading in natural gas. So the first thing is natural gas inventory and production data. So we had explained this in depth in the crude oil video. So again, if there is a lot of supply, then the prices have a very high chance to go lower. And if there is a lot of demand and the supply is not able to keep up, a lot more people will be willing to pay extra or to pay premium for any goods and service. So same is the case with natural gas as a commodity here. You have to watch out for inventory, which is going to tell you what is the supply available in the market today, as well as production data, which would tell you about the supply in the market. But if you want to know about the demand in the market, you should understand that natural gas, especially in the developed world and in colder countries, it is used for heating purposes. Okay, so based on that, US weather conditions as well as European weather conditions will be very crucial when you try to analyze natural gas prices. So if there is a very cold winter in Europe as well as in the US, natural gas prices tend to shoot up because they use this for heating their houses and their offices and any commercial buildings. So you have to understand this and track supply using the inventory and production data, and track demand using the US as well as Europe's weather conditions. It's a very interesting concept in itself, but once you understand why, right? Once you understand the why, I think it would be very clear how the prices of natural gases move. But one more thing here, the price of crude oil will also definitely impact the natural gas prices. So crude oil, without any doubt, it is already called as a mother of all commodities, and it is one of the most traded commodities in the world. So the prices of natural gas, again being a energy based commodity, is very dependent on crude oil prices as well. So make sure you have that in mind. So in order to just give you some clarity, I'll show you the monthly chart of natural gas as well as crude oil prices here. So you can see that the candlesticks are natural gas futures prices, and the purple line is the prices of the crude oil contract. So you can see that even though it is not perfect, it is definitely a variable that you should be considering. Any large movements in crude oil prices will affect the natural gas futures price. But every natural gas futures price movement will not affect the crude oil price. So make sure you have this in mind. And just to give you some context on the chart, so in 2022, when there was a good winter in Europe, and the energy demands of Europe was not met because Russia cancelled or closed a lot of pipelines, you can see how the natural gas prices spiked, right? This was around the time of the Russia-Ukraine war, right? So the natural gases price went up like crazy, and you can see that it went up almost 187%. That is why traders love this commodity. And as always for any commodity, because these are traded in the international markets, you'll always need to have a look at the dollar price and the dollar index. If the dollar is getting stronger, there is a natural tendency for commodity prices in India to move up, right? Because if you remember the previous all of the episodes, we had talked about how the commodity prices in India are a variable of the international commodity prices multiplied by the dollar exchange rate. So make sure you have this in mind. And again, geopolitical concerns and pipeline concerns. So just like how we talked about the Russia-Ukraine war and a lot of pipelines being closed and the war being a huge issue, this caused a lot of problems in the natural gas trading space because it started becoming very volatile. So make sure you have that in mind as well. And for traders, again, as all commodities, it is very hard to manipulate the price of commodities. So price actions and technicals work really well here. So if you saw the recent example of Kalyan Jewelers in the equity market, it had gone up by quite a lot, nearly a 1000%, and it has crashed down 40% just in the last 1 month. Everyone is talking about it. People are concerned about it and are not understanding why this situation is happening. But when you're talking about some international traded commodities here, even if some price movement does happen, you'll be able to really understand why it happened, and then you can take intelligent trading decisions based on that. So that's all for the video. Now we have done 4 videos in the series. So the first one was commodity trading for beginners. Then we talked about crude oil, which is the mother of all commodities. Then we talked about a mega episode where we talked about silver and gold together. And in this episode, we discussed natural gas. So if you want any more videos, let me know in the comments down below. What are your thoughts? Did you or were you able to learn really well about all the basic concepts that you need to understand here? And what are the next things that you would like to see from Market Feed? This is Ajay Ajith signing off. See you all again with another fresh video series and fresh videos. So make sure you're subscribed for that. See you. Bye-bye.